confirmation. Order my 3 to 5 confirmations. There's so many different things you can do, right? I'll send you guys an example of a nice trading plan, right? But as long as you stay disciplined and consistent with that, it's just crazy growth because of the risk reward on each trade that we're taking, just like the stuff we talked about today, right? That's really it. Just plug in and then just get people set up, right? And especially when you guys are like, you're helping people and stuff like that, just set them up. First 28, 48 hours, like set them up and get them going because the excitement's there, right? Like just a simple walkthrough, just a simple, just show them how to do stuff, like show people on their MetaTrader how to put a demo account, all the extra stuff, just play with it. Like if you give somebody a demo account, just put them in a trade and just show them how to do it, they're already gonna just have fun and play with it. So when you tell them to go in the academy and actually study, they're just gonna go down. Cool, great question, thank you.
Awesome guys. Next, anybody else? Rob, you got going up here, brother? We get Rob to ask a question. Let's give Rob a round of applause.
Alright guys, yeah, so definitely that's great to have you in town, having me here. I appreciate having me here. So far out of all of the guys of you that don't know me, I've been trading for 10 years, and the closest strategy to my style of trading out of so far all the educators I've seen in the whole company, Sammy is definitely the closest thing. So we definitely trade on so many levels. No, it's true. So like I do respect everything you've said today is accurate, bang on, and in line with what I agree. And like when he's like from day one, where he's saying risk reward ratio, protect your money. And my question is for you, like how long do you recommend for a brand new trader to stick with a demo account and to be confident enough to switch over to what is your opinion for trading?
So when you say the demo account, are you wanting them to? Yeah, no, I understand that. Yeah, my bad. When it comes down to the demo account aspect, I would say honestly, what I tell like my students to do, like the people that are coming into the organization, I have them make a live account and a demo account at the same time. I tell them to practice the stuff that they're learning from us in the academy on the demo account, so they're consistent, they're profitable, they can see the trades and stuff like that. But I'll have them follow our trades with their real money, just so they could actually be learning and earning at the same time, right? Because you're still gonna follow the risk management even if you're taking the trades. You're still gonna make good percentages, risk reward wise. Whether it's like the average trades are like 1 to 6 or 1 to 8 minimum risk reward, right? Some of the more crazy ones go stupid, but I would say just demo wise. I mean, it's there's no specific time. It's just how long it takes them to feel comfortable. I mean, I've seen people demo for a couple weeks and go crazy. I've seen people demo for a year or two and then finally start trading, right? But if you have a solid system and a solid plan, and a good plan and a good strategy, it's cool. A lot of things that in the market that something that's interesting in the market is the fact that the market's always changing and adapting, right? And strategies come and go. I remember having this conversation with Chris Terry. He said in the 1980s, in the early 90s, he said guys would make millions of dollars off the MACD and the RSI, right? Like millions of dollars. He says those same guys, he says they're no longer making money, like they're broke. Like the old things don't work, right? Strategy wise. So with what we've been able to find today with like just the information that's available, it's like I showed you guys today, right? It's like it's a science. Like this is how the money is moving in the market. This is how it's being manipulated, and you just got to learn those easy concepts, right? Because most of it is pretty easy, right? But I mean, demoing to live, I always just have them start a live account just so they can follow along, and then demo until they're comfortable. There's I wouldn't necessarily time it. I mean, they start making money within like the first week or first 2 weeks once they like hop into the trades, right? But I mean, everybody learns at a different pace. It might take you 6 months to get to or it might take you 6 months to get to the point where you're killing it. It might take the fees like 3 months. It might take me 9 months. So it's more of a personal preference. It's just like how fast you can learn type stuff.
That's a perfect answer. I also definitely want to throw out there that I totally respect how you like to talk about be careful in your scalping. Some of the indicators work better when it's short term, but it's not affected by the Trump news or whatever. But I like when you said, you can be right 9 out of 10 times scalping, and then that one scalp will wipe you out. So I totally in line with that, and I like that idea about trading for the long term. and then you avoid the daily noise of that can wipe you out with that little stupid wick that kills you, right? But that also gives you guys the time to build, right? And I appreciate your advice today, reminding me today. Be careful during the Christmas time, because yes, things can move like very violently because of the low volume, and there's big swing for no reason, and then a big swing down the next day. So take this time to learn, like you say, and you know, I want to know in your trading plan though, do you factor into your predictions just the weekly? So looking at the other perspective of not trading too short of a time frame, do you look at longer time frames than your 1 week prediction? Do you factor that into your decision making, like where the economy might be in a year or two? Because you said you watch the economy.
So like, you know, the structure stuff we went over today? When you guys start seeing structure on the higher time frames, like today we looked at AUD USD on the monthly, right? On the monthly time frame, we're seeing that it's coming to that sell to buy candle, right? You know, we talked about it today. And so they've already mitigated off of that position. So all that really means is like the higher time frame is important because you're seeing the overall direction of where the market's headed, right? So, you know, the best thing about it is just following the trend. You just want to you use the higher time frames to see which way the momentum's going, and then you just follow the momentum, right? 80% of your guys' trades should be going with momentum and going with the trend, and 20% should be like reversals and stuff, right? So really, it's just zooming in and zooming out of the time frames. But great question, bro.
Awesome. Great job, Rob. I got a question. Yeah, guys, come on up here. If you got a question, come on up here. Vitaly, give Vitaly a round of applause, guys.
Thanks, I appreciate it. So you had mentioned just in this conversation how the things that worked 20 years ago, you mentioned those two guys or a couple guys, don't work anymore. Can you expound on that?
Yeah, for sure.
Does that mean once we learn the system, right, and not only just follow you, but kind of dive into education and kind of learn how to trade?
Yeah.
Is that knowledge become obsolete in 5 years? Yeah, break that down. Give us some more insight.
Yeah, for sure. There you go.
Do you have to constantly like?
No, it's not like that. So check this out. So when I was talking about the guys 20 years ago, they were using indicators, right? I was talking with him earlier. We were talking about indicators. When it comes down to indicators, they're a lagging instrument. They tell you kind of what. Yo, my bad. Indicators are like lagging instruments, right? So they kind of tell you what's happening after the move's kind of already happening, right? So especially in the forex market, that stuff just kind of comes and goes. So the stuff that we're going over today was just like real market geometry type stuff, like the way, you know, there's a science and there's a way that the markets move. Like they don't move willy-nilly. They move like specifically. These patterns repeat. Like the same stuff I'm showing you guys today. You can go back in time and look in like the 80s and 90s and so on and so forth, right? So a big part of the way we're doing it is we're playing off of where the banks are moving the market, right? So first off, we learned how to identify where they enter and exit, right? Like manipulation-wise, and then they play off of those same points several times. So where they exit and enter is pretty much where we're exiting and entering, and where the targets are and so on and so forth. It's not like perfect. It's not like I got a homie at the bank saying, "Yo, bro, we're about to get in this trade. Come on, you know, Bank of America, like Texas." It's not like that. It's just like based on what we've been able to learn and the consistency of it, we've been able to see what happens. And I mean, yeah, we take losses too, bro. But I mean, losses are gonna happen no matter what. I mean, like LeBron hits his shots, right? But you just keep moving. And the thing about these concepts too, it's I don't know, like the guys from like 20 years ago when I was talking about that. So you said in 5 years would it be obsolete? It might not necessarily be obsolete, but there might be more information that we can add on to it to make it better. You know, people back then, they were just, you know, they were. I mean, it was less information back then too, right? What's good, bro? Hopefully that answered everything. All right, thank you, bro. Great question.
All right, guys. Noel, give Noel a round of applause.
Whoa! Awesome job, my brother. Awesome job. The question for you is, you started out at age was 19? You guys, when you first started trading? All right. So you've come to the point where you understand the fundamentals of what to do and when. what sort of got you to the place where you actually began to master the skill? And then you said there were some ups and downs with it, so that we can sort of avoid some of those pitfalls. What are some of the things, like fundamentals, that in terms of, okay, somebody's coming in the first month, first 6 months, first year, as they're mastering this material, where should they be looking? What should they be studying?
So coming into it, when we first started trading, we were trying. There wasn't information was there, but it wasn't good information, right? So there wasn't like anybody specifically showing us or mentoring us or guiding us. Like the information you guys got this weekend was like good quality stuff. So what I really wanted to get across is, when we were learning, or the reason why we have the skill we have today, is because we took all the losses and the lessons, right? We did all the hard work. We paved the way for what works. Eventually we got to the point where we found something that worked. We stayed consistent with it. We made it better. We made it better. We made it better, and now we've made it to what it is today, right? So when it comes down to what we're doing for people, is we're showing them what works right off the rip, instead of them wasting time and year and energy and money just trying to do the little stuff to make it work. We're showing people what works. We show it right. We right off the rip, like when people get started, we just plug them right into the system and show them a strategy that works, that we've been using for 1 year, 2 years, 3 years, things that we're constantly getting better. So when they get plugged in, we just plug them straight into the steady education, and then they steady make bread. But was that everything on the question? You said something about fundamentals as well. My bad. I don't mean to make you get up. You're butter chicken, right?
All right, so what I'm saying is this. I get that there's the study app, and I get that you have the education that you're rolling with. The idea is that people want to be able to learn to be able to do it for themselves, right? And so, in terms of those step-by-step fundamentals, if I'm buying real estate, I understand if I go into a certain area, I know I have to go to City Hall, find out what the city plans are. I have to find out what the migration patterns are, what the income levels are, what the city plans are. So it gives me a better sense of where I'm going to get the best value for my money. So there are fundamentals, there's a checklist that you go through in order before you make that investment. And so I'm saying is that first, because we're trying to fast track, although it takes time to learn the skill. So I'm trying to get, is there like a fundamentals checklist,
Yeah, so we call it a confirmation checklist, right? So when it comes down to your trading, you're going to have certain confirmations and influences you need before you enter a trade, right? So within the education, we'll give you what you should be looking for to take the trade. Like earlier when I was saying trading plan, your trading plan, you'll write your confirmations. Okay, I need to have at least 3 to 5 things telling me the trade's going to go this way based on whatever I'm looking at in the market, right? But we'll break down what those specific things are. So like we have that, like if you go on the Go Live, that's already like a thing. Like it's just I guess the way we ask it, if that makes sense. But yeah, there's a confirmation checklist, like certain things that are key to find a successful trade. Oh, mastering it. I mean, mastering it just kind of goes back to you and your person. Like how much discipline you have. Like you got to practice it. But I mean, it's the same thing every time. Like every trade we take, it's the same thing every time. I'm only buying the stuff I'll teach you guys this week. I'm only buying an uptrend, right? I'm buying higher lows. I'm only selling a downtrend. I'm only selling lower highs, right? I'm buying off key levels off the fib, right? We're entering off institutional candles. And that's literally the same setup every time. When you're trading, every trade should pretty much be something very similar. Whether you're buying or selling, it's going to be, okay, I'm selling off of these confirmations. You just get good at finding those specific confirmations. And literally, it's just like shooting a free throw, bro. You shoot it so many times, it's just natural. So once people learn the confirmations, then it's just up to them, like how long it's going to take them to become consistent. I mean, there's people that come in like 2 weeks on the strategy, 2 months for killing it, right? Oh wow. But it might take you way longer to do it just based on the type of person. Like there's not like an average. I mean, the average is just based on you as a person, like how fast you're willing to learn. What's holding you back. If you're going all in, or like just little factors like that. It's like anything else.
Awesome, guys. Great question, guys. Give a round of applause.
That's great.
Anybody else have any questions?
When are you back in Vancouver again? Ask him about stop losses.
Anil, come on up. Anil, come on up, brother.
When's the best time to put a stop loss, and how do you use them properly?
Hey everyone. Actually, Rich has a question. I'm gonna have him come ask you after I hold that. But I have a very basic question. I do mind sharing. What's the biggest amount of pips you took in a month? And your biggest payout in a month? If you don't mind.
Yeah, for sure.
Disclaimer.
Yeah,
Disclaimer.
disclaimer.
Past performance is not equal future result.
He just wants to get excited.
You're not like a financial advisor. Take your own trade, your own risk, and all that.
I say biggest tips, probably like maybe like on like forex, probably like 2,000, something like that, somewhere around there, probably like 2,000.
You can leave it at that, dude, because we can do the math with the income.
Okay, cool. Well, well, I'll tell you, we can do like a visual thing, maybe on a personal basis. How about that? Cool.
Yeah. But you wanna go? Thank you.
All right, Richard. Give Richard a round of applause, guys.
So the question I ask, and I think it's something that we all need to figure out, is when's the best time to put a stop loss, and how do you get out of bad trades?
So the time to put a stop loss is before you even plan on getting into a trade. So every trade you take, you should already have a set stop loss and a set TP, right? So trading's all about calculated risk, right? So before you enter a trade, you should be willing and understand like, okay, I'm willing to risk 2% on this trade. Okay, how much are you willing to gain? Set yourself rules up for that. You know, for us, we got to the point I was explaining earlier, the precision of trading. We're entering at a very precise way of the market, so we can have tighter stop losses with risking the same amount of percentage. You know, 2% on a 10 pip stop and 2% on a 50 pip stop is a whole different ballpark, right? So you should have a stop loss on every trade, because the biggest thing about trading is just protecting your capital, right? If you enter a trade without a stop loss, it's just like, it's not very disciplined, right? It's the worst possible thing you can do, because you never know what can happen in the market. You know, a lot of people didn't have stop losses and they're not paying attention to fundamentals. You know, last week they had elections in the UK, right? Yeah. So old boy got reelected, whatever happened, and it went up, right? And it's crazy because, you know, the people that manipulate the market, you know, institutions, firms, whatever you want to say, they use those elections and fundamentals as a reason to push the market however they want, right? So, you know, if you don't have a stop loss or something like that, like, you're gonna blow your account up, right? And you don't want your customers, you don't want your student base, you don't want your family to come into something and kind of half, you know, I'm not gonna use the word, but you know, they're just like gambling. They're not treating it as a profession, right?
Now, if you put your stop loss not too low, you're gonna just hit it almost a lot of the times, right? So do you have a specific price that you put it down? Like, is it 5 pips, 10 pips?
So we enter off these institutional candles, right? So the majority of the volume in the institutional candle is at the open of the candle with 50%. So we usually put our stop loss at the close of the candle.
The close of the candle.
Yeah, so I mean that's why they're tight. It's like 10 pip stops, 15 pip stops, you know, 5 pip stops, even 3 pip stops, right? So we're going from the lowest time frames to the higher time frames. So all these concepts, they work from any time frame to any time frame. Like if you have like premium trading, you can go to the 30-second time frame or 15-second time frame. The same concepts work on those time frames as well, right? So I mean the stop. It's just, you should always, I mean, you need a stop loss, right? You need it. When it comes down to the take profits, it's just like, you know, just target areas where, like today I was breaking down stops and I was breaking down targets. So targets are places where banks exit and enter, right? So they're always leaving behind positions because they're always hedging their positions. You know, they have so much money that, you know, if they just buy and sell, buy and sell, buy and sell, they'll just move the currency any type of way. So when they enter the market, they have to sell to buy and buy to sell, right? So when they exit and enter the market, when they let go of buying pressure and selling pressure, it moves the market the other way. So we're pretty much entering the market when they release buying and selling pressure, which pushes it in whatever direction we kind of want it to go. Does that make sense? It's more of a visual thing, but
You also talked about hedging.
yeah.
Do you hedge?
Um,
Do you ever, like the stock's going in one way, you buy the opposite, so now you're hedging with that.
Yeah.
Do you ever do that? I know institutions do that.
You can. It's more like advanced. Like, you want to get people to the point where they can at least sell. Like, if you're in a downtrend, you want to get them to the point where they can consistently make money just selling the lower highs, right? and then eventually you get to the point where they can understand how far a move might go, like measurements, right? And then they can buy the lower low, which, 80% of your trade should be continuations, right? 20% reversals. So buying a low to then come and sell another lower high. Does that make sense?
Yeah.
Yeah. So I mean, you can do that a little bit too.
Do you do hedging?
A little bit. I mean, we don't send out hedges like type trades. We just, safe trades that are reliable. That's the goal.
Okay.
Like the safest possible, the smartest things. Waiting for confirmations. We do a lot of waiting, and the reason why is because we want the best quality because it's investing.
Yes.
A lot of people treat it as a game or a hobby or whatever. I was talking about earlier. Most hobbies don't make people money; they cost people money, right?
True.
So it's just like you don't want trading to be a hobby. You have any other questions?
No, that's good. That's good.
All right, so we'll get with we'll go Michael, and then we'll go Cal. You guys meet Michael, round of applause. You guys, good question.
Shut up.
Hello, thank you. I see you doing the top-down analysis. So how do I know when is the lowest time frame to use for to analyze your institutional candles?
Are you at today's session?
Yeah, like when I trade.
Okay. When it comes down to it, you could break it down into any time frame. You could break it down into like any time frame. Like you can go all the way from the monthly to the 1 minute. But I would say like, with the experience that you're gonna gain, you'll be able to see the 1 hour looks pretty good, right? Most of the time when you're trading off those institutional candles, you can break them down all the way to the lowest time frames. But today I talked about when the candle is majority wick, or when the candle is majority body. So like if the 1 hour it's a lot of body and every other time frame it's like less, it's like more wick, use the 1 hour, or maybe the 4 hours better in a specific situation. But every trade is going to be similar, but they might have little differences. You might find a trade on the 1 hour compared to the 45-minute time frame, or the 3 hour, the 2 hour, the 8 hour, whatever it might be. That's why we say go from the top down, because you're finding the overall direction of the market on the higher time frames, and then you're zooming in so you can see the noise. But overall, you just want to. Most of the trades we're taking are off the 4 hour. Like the 4 hour is like the perfect time frame because it's good enough to get good entries on. It's good enough to see structure on the market. Your highs, your lows, so on and so forth. But it's like a good roadmap time frame in the 4 hour. Then you go in the 1 hour to get more precision with your entries. And then if the 1 hour is blurry, you can't see something properly, then you can go down to the 45 minute and the 30 and the 15. The 15 is super solid too.
The lower time frame it is, the
4 hour, 1
higher
hour,
is
50.
Not necessarily.
4 hour, 1 hour.
Not necessarily, because what can happen is you can find a great setup on the 4 hour, and then what you do is you start once it's starting to get to your entry area, right? Then you start zooming into the lowest time frames, and you're looking for the same thing on the lower time frames. Like you can find an institutional candle on the 4 hour, and then you can zoom in that same area. You might find one in 5 minutes, and then just like things start to line up. When they line up, it's just more confluence, right? More confirmations telling you that the market might play out in that direction. So it's not necessarily more risk. If you guys start learning about like Wyckoff and like the schematics, John talks about this a lot. With the schematics, you can see those schematics on all time frames. And if you find an area of interest on the 4 hour, maybe you go down to the 5 minute, 3 minute, the 1 minute, and you see these schematics, those are like the best possible entries before the market really changes direction.
Thank you. Awesome. All right, guys. Callie's got a question. Guys, give Callie a round of applause.
So my question is, sometimes I get the alerts, but I'm sleeping. They come in sometimes at all different times. How long after the alert has been called is it okay to get into that trade?
So the first thing you got to do is just look at the trade. First thing you got to see is if it's been activated yet, right? If the trade has already hit the entry point and it's gone, then it's gone. You want to chase after trades, right? There's always going to be another opportunity to take a position, right? The safest position is to not be in any at all, right? But if the trade hasn't activated yet, you can hop in, right? If it's a sell by market or a buy by market and it's still around the entry price and you want to get in, you're more than welcome to get in. But if the trade's already 10, 20, 30 pips in profit, it's already looking good, like just wait for the next one. For sure. No problem.
And you guys, I'm just gonna add to what that question earlier about stop losses and everything. To be honest, I don't think anybody should be trading here without a stop loss, because what you guys should really take it away was, regardless of the strategy, if you don't know your risk to reward ratio and you don't know your stop loss, like what you're willing to risk, then you're not trading properly. You're trading gambling style. Make sense? Like I've personally done scalping. And what I used to do, you guys, and if you guys have been in my trading, like where I do talk about the $100 example, right? When we're talking about lots, and just using the lot size as an example, right? When would be too much of your account, right? So you don't think about the trade and start praying to God, like Justin keeps saying, you know what I mean? Where you're waiting for the trade to come back up. You should know, no matter what is your threshold that you want to hold, and after that, you want to cut the plug. Who cares if the trade's good or bad? It could ruin your account. It could push it to a worse situation. So when you're actually learning from Justin, and why we're so lucky to have Justin and implement him into our program, all of our education, everything, is no trade he has doesn't have a stop loss. Make sense? No trade doesn't have a take profit. Actually, a lot of his trades, you guys, have take profit 1, 2, and some of them take profit 3. Okay? Yeah, absolutely. Yeah.
Yo, so the reason why we have take profit 1s and 2s and even 3s is because we're swing traders, right? So we're taking trades and we're gonna hold them out for the distance. But most new people, they're not gonna be, they wanna just get in and get out. You know, they wanna make some money. So we set take profit 1s. And usually we do those at like 1 to 2 or 1 to 3 risk reward still, so it's still good. But we just do TP 1s just so people can make some money and then, you know, go share the results and blah, 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 right? I mean, majority of the time, the way we're doing it is once a trade nears our target 1, I'll usually move my stop into profit, a couple pips, and I'll just let the trade ride. And that's kind of how I like to do it.
I like
Yeah,
that.
that's a great suggestion, you guys. Honestly, it's one of the things that we talk about in the academy. You should really, you know, going back more into kind of what Robert was saying earlier, a good indicator of when you should go live trading is like you know how to move a stop loss and profit. Because like those are good scenarios. If you're following someone like Justin, he's going for a big swing trade, the trade's already in profit, well, just move your stop loss off and remove your take profit. Or put your take profit as take profit 2. And then keep going, and then keep going, keep going. Now, obviously, you have to have an active note of that, right?
And you guys could always like take some of your position off too. You know, target 1, maybe take like half your position off. You know, you can modify your trades. You know, you can adjust your lot size on the trade. You can close half your position or 30% of your position, whatever makes you happy. If you're trading at a 0.01, which is like the smallest thing you can do, you can't half the smallest thing you can do, right? The smallest lot size. But you can take some off the table and then let the rest ride, right? You're still making money and you're still, you know, positive equity and stuff like that too.
So all of that is just by under modifying? Like under
Yeah, I was just going to say that. How many people here know what Justin's talking about? Okay, so for those of you guys that don't know what it is, a lot of the academy education that I went through, and a lot of us even as educators, we probably haven't mentioned it to you guys. And it's something we're going to start teaching you about more and more, especially with what we're doing with Justin. So as you guys know, when you guys go into an order, you cannot change the direction, right? You cannot change the lot size that you originally set, and that's pretty much it. The only things you can control are your take profit and your entry, right? You cannot change your entry price, but now you have your take profit, you have your stop loss. Well, you know, when you go into a trade, after you place a trade, you modify it. If you have a lot size that's bigger than 1 cent, you can start to cut that down. And that's something we're going to show you guys how to do in the trainings, okay? So that you can, like Justin said, imagine you're already into profit in a trade, and then you can cut it in half or take a profit now to cut it in half so that you can, you know, carry on the rest of the trade and still keep your position, but taking a percentage of it out. So we're definitely going to go over that, you guys, over this next week coming up. And I just want to mention this, just segueing into that, and then we'll go to some more questions, you guys. My good friend Sarah there was asking what's going on with a little bit of the training stuff that we're doing here locally with us. You guys, because of the holidays, we slowed it down, but starting January back up, we're back up to 4 classes a week, okay? So that's going to be huge for all you guys. It's going to make you guys have a lot more success and a strategy, more training, more support. You know, if you don't understand something, come to those classes, come to those classes, come to those classes, come to those classes. When you're out there, I know some of you guys are building, and you guys really, how many people, you know, can say that they're building quite quickly, and maybe they don't feel like they can support a lot of people, yes? Well, the real reason why we're putting up those classes is because then you can just plug your people in and plug them in and plug them in and plug them in, and they know where they go, they can get that support. Plus, we're all interactive in those classes. They're not just us teaching you what it is. We're gonna practice on demos. We're gonna show you how to do it. We want you to walk away from those classes being able to say, I got it. I can do this on my own. Thank you guys. I'll just carry on the rest with Justin or someone online where they're gonna follow their educator. So just to give you guys a heads up on what's coming on. Okay, and that'll be January, February, March. We've got it all set up. Where there'll be 4 classes every week, and we'll have a schedule that'll come out with a set time, location, everything, so that everything will be guided for you guys for the next 3 months to come. All right, so you guys will have that. It'll be coming out quarterly for all you guys. Okay. So other than that, we've got Jody and then Rebecca. So Jody, come on up here. We got the question. Guys, give her a round of applause.
Thank you so much for being here. Thank you, Nafis, for organizing him to be here. It's really cool. My question is, as a trader, like as experienced as you are, if there's any, what kind of challenges do you face currently as a trader?
I don't know about current, like I'm not saying my trading's perfect. There's always times to get better and stuff like that. But I say as you're becoming a trader, it's just gonna be your emotions one, and you guys have dealt with that. You know, you're on top of the world. You think everything's amazing. You're invincible, and then just like we said earlier, you know, that one trade will take you all the way back down to where you started and maybe even worse, right? So your emotions. 2 is just, you know, you grow a lot as a person when it comes down to trading, right? And it sounds crazy because you're just looking at charts, but you have to grow into a better version of yourself to become successful at this. And that's what all the personal development that you know, the team is setting up for you guys. You know, you guys had a great session yesterday with Mr. Noel. Great personal development, right? The same stuff that you apply to your business when it comes down to personal development is the same stuff you have to apply to your mindset when it comes down to trading. Because at a certain point, if you don't have discipline, if you're trying to get rich quick trading, you're gonna have a bad time. You're gonna go into dark mental places because you're losing money and you're revenge trading and blah blah blah. So you gotta know when to quit when you're down. You gotta have discipline. Like, yo, having just risk management and doing that is good because honestly, you know, as a beginner trader, I thought risk management was the most boring thing. I was like, I want to get rich now, right? But what we realized was, yo, you can make money very quickly if your risk reward is great. And what we realized was if we were taking trades that were swing trades, we were getting consistent trades, big trades that were decent risk reward. And then all we did was we kept on tweaking it to make it better. And now we found a way to precisely enter swing trades. So our risk reward is insane. So you don't have to risk a whole lot of money to have great reward on your trades. Does that make sense? So honestly, just follow the risk management, right? Practice the strategies that we're teaching, and then lastly, just work on your emotions. You know, us as human beings, we're very emotional creatures, right? The markets are just like they're playing straight up off of emotion, right? So you know, a lot of people say you gotta sell green, you gotta buy fear, blah 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 blah. I mean, that's true as well. But if you master your emotion as a person and you understand how the 5% of the world are trading compared to the 95%, you're gonna get the 5% success, right? It's just like the cash flow quadrant. You guys remember we did that example with the cash flow quadrant? You know, 95% of the world controls 5% of the wealth. 5% of the world controls 95% of the wealth. Same thing when it comes to the trading market, right? Like we're 95% of the traders in the world, right? We're in that category, but we control no percentage of the market, like 5% max. And that's like the top guys in our field, right? And then there's the 5%, the institutions, the banks, the firms, the hedge funds, the, you know, whatever you want to say, George Soros, whoever, right? There's those guys, and they control 95% of the money. So if you learn how they move and they play the market and you follow them and the way they're entering, like the stuff we're teaching you guys, you're going to have a much better, you know, journey than we had, right? But great questions. Thank you.
All right, guys, next up we got Rebecca. Give her a round of applause, you guys. Top leader here in the program.
Okay, so my question is, when you're marking up, like let's say on the 4-hour chart, and you want to execute on the 15-minute, the 4-hour chart overall is an uptrend, and the 15-minute looks like a downtrend. What do you do? Do you wait, or do you just look at a different pair?
Well, you want to wait for like your perfect entry, right? But remember today we were talking about how there's trends inside of trends. On the 4 hour, it might look like an uptrend. On 1 hour, it might look like an uptrend. On the 15 minute, it might look like a downtrend, right? So you want to always play off what the higher time frame is saying. But you'll be able to get more precision if you wait on the lower time frame when it's coming up to like your perfect entry zone. Does that make sense? That might be more of like a visual type question with like the actual candles. So I'll show you an example like later on or something. But you just want to make sure that you know where you're at, because on like the daily, it might be a huge downtrend, but a downtrend has a pullback eventually, and that might look like an uptrend on the 1 hour and the 4 hour, and then you might be taking it up to a point where the trend is pretty much done. It's about to continue down, and you just need to know where you're at when it comes down to the chart. So it's the top-down analysis. You know where you're at from the top down. It's like Google Maps, right? Like if you're looking at Vancouver, right? Think about the daily as looking at the city. And think about zooming in on the 4 hours, like zooming into like, what's a neighborhood in Vancouver? Yeah, whatever. Think about your neighborhood, right? You're part of the city, right? Like I'm from Dallas. Like think about Google Maps as Texas, or think about the daily as looking at Texas, right? And then I think about looking at the 4 hours, me zooming into Dallas. I think about looking at the 1 hour as like me zooming into my specific area in Uptown, right? I can see everything. It's still Texas, right? It's still Dallas. It's still the same thing, but it's just like zooming in and out. You can see more noise, you can see less noise. Hopefully that makes sense. That's like the best way I could put it. It might be more of a visual thing.
Yeah, show me later.
Yeah, that's good. I got you. Good question though.
Very good question. All right, come on up, brother. You got another question? You guys give him a round of applause.
Yeah, so you mentioned that it's mostly emotion, right, and controlling it. So what do you go through to increase your ability to control your emotions?
So just like the list.
Yeah.
So, you know, you're like write out a trading plan. You know, I'm not going to take a trade if I feel mad. You know, how are you feeling? Like, because you got to think about it. It's just like it's emotional. You know, like if you're having a bad day and you go to work, you might have a fight with somebody, right? So it's just like you gotta know when to kind of control your emotions. But a big part of that, bro, is just you know, having your trading plan and just saying this, like if you tell yourself, hey, I'm not going to get into a trade if it doesn't meet these circumstances, and let me say this a different way. So the way we got really good and disciplined was because I always thought this is the way I look at it. If I have all my rules laid out and I'm following these rules that I give myself, right, and I lose the trade, then it's the market's fault, right? But if I take a trade and I break my rules and I lose, then that's my fault, right? So what you got to realize is that it's either the market, you're going to take losses no matter what, it's the market, right? But if you're following all your rules and you're staying consistent to your plan, and you're winning, then I mean it's working, right? But if you're taking trades and you're breaking your rules and you're over leveraging on a specific trade, or you're revengeful on a certain trade, or you're you just you're feeling like gambling type stuff, right? If you do something wrong and you lose, like those are like things to learn from, you know. So that's how you kind of like manage your emotions and stuff like that. So you just have a checklist, and if you're following that list every time, and when you take a loss, you know, you just brush it off. You know, learn why you lost and then move forward. But if you have a list of rules that you're following and you break those and you lose, well, that's your fault. Does that make sense? Hopefully that answers that. All right, thanks for that. Awesome.
All right, guys. Does anybody else have any other questions? Arun, come on up, brother. Awesome, guys. Give Arun a lot of applause, guys.
Just a quick question. Thanks.
Thanks for coming here.
What's the plan? How many days do you do then monthly stats with that?
On the what?
On the planning. The trading. How many days do you do? Yeah.
How many trades?
Average.
So you don't want to have a don't even look at. So what I like to go for is I like to go for percentages, right? So I say like the way we trade, we're doing 2% risk, right, on trades, and we're doing like 1 to 8 minimum risk reward, right? And I mean, you guys can start off at 1 to 6, right? But if you find even one, if you're aiming for 5 to 10% weekly, right, not daily goals, It's like, let's say you set weekly goals, right? If you're going for 5 to 10% for weekly goals, and you find one good swing, and you're doing the 2% risk, like, bro, 1 to 6, that's like 12% your game. You feel me? So it's just like, you don't want to be, it shouldn't even be a thing about how many trades I should be getting in. It should just be like, what's the quality of the trade I'm getting in? I'd rather take one quality trade in the week than take like 3 like trades that, you know, are just like not as quality. I don't know how to explain that a little bit better, but like, I mean, bro, there might be an opportunity where you see several trades throughout the week. Like, yo, what I like to do is I'll look at like maybe 5 of the best setups for the week. And out of the 5, I'm gonna see which one makes the most sense. Maybe that's the one I'm gonna go with, right? Because I mean, there's like 40 pairs. You could look at, like, you could take 40 trades if you wanted to, right? But it's not about that. It's about finding the best possible one. Hopefully that makes sense.
I think I should rephrase it. Okay. How many days do you send out on steady?
Oh, on steady.
Yeah.
Oh, okay. On steady, it's just like, there's not a specific day or time. Whenever we find it, we send it. You know, there's no way to force a trade or anything like that. Like, you know, there might be a week where we find 5 trades. They're great. They all hit. Amazing. Might be a week where we find 1 to 2 trades. Maybe 1 to 3 trades. Maybe there's no trades for a week. But that's just, it's about the quality aspect of things, right? I'd rather have 1 trade that wins and pays me out for the entire month than try to force something and lose for no reason. Does that make sense? Yeah, perfect. Thank you, bro.
All right, guys, does anybody else have any questions? No, awesome, you guys. Listen, let's give a round of applause for Justin. Appreciate everybody. Excellent. We're gonna wrap this up. Big shout out to Rich Live TV since we're live for him. All right, one more plug for Richard. And guys, just to wrap up everything, a couple things just wanted to make sure that we want to give you a shout out for. One, you guys, those of you guys that enjoyed Noel's personal development, only enjoyed that as well. Awesome, you guys. So if you guys plug in if you guys want. He's offering to do some free stuff for you guys. On top of we got at winwithnoel.com. Okay, so that's one's right there. Secondary, you guys. How many people here have Steady already? Okay, cool. If you don't have Steady already, this is worth it. Make sense? I really recommend a lot of you guys that are brand new to get the Steady program. Make sense? If you're struggling with Steady, there's really no struggling with Steady. So I just wanted to correct myself on that. If you have that program, he makes it as black and white as there is for you. And much like what Justin had said, it would be very confident for us to say this in front of you, that yes, you can go ahead and start doing the live trading if you're just going to follow the Steady trades, okay? Being able to do the proper risk management wise. If you're somebody that's learning how to trade and doing it on your own, go to your demo, do it on your demo, okay? Do not do live trading. Do not think, oh my God, I lost this trade, I'm going to go see what Bitcoin does, okay? Figuring it out that way, all right? But last but not least, you guys, here's the main one. This is why we did this whole event, you guys. Honestly, guys, this whole event that we did this weekend, the whole purpose of it was to just introduce you guys to a very, very small taste of what London's going to be like. Make sense? For anybody that's ever come with myself or the group of leaders, and when we take us to a massive convention, this is the best thing you're ever going to hear. You guys, coming up in London, the gentleman that had educated majority of all personal development coaching, the best personal development coach in the world, is Bob Proctor. How many people know that? Yes? Bob Proctor is the keynote speaker and doing all of the key personal development in London for all of us, you guys. Well worth your money? Guys, to go to a Bob Proctor's course would normally cost you anywhere from $2,000 to $10,000 at a minimum. Make sense? So to get the education from Bob Proctor and apply it here to trading, incredible to the fact that we pay only hundreds of dollars on it, okay? On top of that, Justin, his partner John Dallery, all of them as well, and all of the other educators you're going to get a chance to learn from and see from them are all there at the event. Make sense? And I want you to know what London will look like. So you guys, for those of you guys that have never experienced it, well prepared for it. Starts off usually on a Friday, okay? And on Friday, the first day of Friday, is all of what you saw today, with just Justin being educators. Imagine all of the 100 educators that we have, all having different time sessions and literally a schedule where whatever you would like to learn, whoever you'd like to learn from, you can attend a class that they're going to go over in detail. you're interactive, asking questions, learning from them firsthand, and getting a chance to experience it, okay? You guys, we got to show a lot of love to Justin when we go there, okay? That's the biggest thing. Justin, are you going to be doing a Go Live session on London?
Yeah, maybe.
All right, so we're going to push for that. No, London, UK, you guys. So in February. London, Ontario is good too. Nothing's wrong with that place. Okay?
In February.
Yeah, absolutely. We're talking about London, UK in February, okay, guys? So on top of that, Friday looks like this. You've got all the educators coming on board, and this is truly the best time for you to get the best education. Being able to interact, ask some questions, get a chance to meet them, learn about them. I know a lot of the students that we went to in the last event, when they came back, they were able to learn a lot from Kim Torres. That was primarily somebody that we learned a lot from the last event, and she helped a lot of our students grow a lot of their accounts real quickly with what she was teaching. But now that we're kind of we're transitioning more into institutional style trading, more higher reward, lower risk, using proper risk management style. We want to implement what literally Justin and John Dollery are doing, you guys. They've got 100% of our support with everything they're doing. Phenomenal traders. I've never seen anybody do it. Plus, again, how many people here do not want to binge crackhead trade? Make sense? Do you guys know what I'm saying? That is what we're trying to give up here, okay? We are all binge trading here, right? The real reality is we want to switch over to a mindset. And just to finish this off, I need to say this from the front of the room. It's going to be difficult because we created I'm going to say this honestly, we created a bad habit for you guys. Make sense? The habit was getting onto the sessions and doing it. It was really fun at the beginning when we were all demo trading, but once people were doing live trading, that was when it became not a good show. Make sense? Because people didn't know how to do the risk reward management. They didn't know when to exit the trades when they should have. They weren't capitalizing on it. And again, you were leaving it to such a wide open window. We want to make it so it's a better system, a better program for people to follow. And Justin said it himself today, you guys. I honestly truly believe the next wave of our students that are coming into the academy are going to be the highest performing students we've ever experienced in the academy because of the proper education on how to trade, following the system a lot easier. Literally, we can get your grandma to do it, we can get your 12-year-old child to do it. Make sense? And it's all about having it be a more simpler system, allowing you to focus more on things like building the organization, focusing on building your residual income and everything. And that really, you guys, is the best thing. So Friday will look like that, you guys. That's what it'll look like for all the education. Saturday, it's going to kick into right away the stuff that we're doing with Bob Proctor and all the personal development. And then, guys, this company is not a nobody company. How many people have recognized this? Yes? Like, the chairman in this company, I would say, are the highest developed, personally trained people on this world. All of them come from a high level of work ethic, desire, commitment. Truly, you guys, they're servant leaders. If you're going to be a great leader, you should learn from people that are actually doing what we're telling you to do. Yes? Like, this is exactly it. Because when you're an example of someone in this company, whether you're a Platinum 600, you're already good enough. Make sense? The difference between a Platinum 600 and a chairman is nothing. Just repeating the process over and over again, day in, day out, serving more people, helping more people, learn about the academy, learn how to do trading properly, learn how to do proper risk management. And all you're doing is serving those people. And that's the thing that's in this industry that people don't have. A lot of these educators, right? But no one rolling up their sleeve to show them how to do it. Yes? That is the difference between us and Academy. I mean, Justin flew away from his family. He literally took the time out to come out here because he's the real deal. He's not coming here to tell us about this program and not be able to show it. He came here and opened up the entire book, opened up his heart, his time, and literally showed us what to do. So that's the stuff that we want to implement. Because you guys, how many people agree that if we've done so far what we've done just in the beginning year, this is our first year running the Academy here in Canada, and we've gotten over 700 students, we did pretty well, yes? Yes. Absolutely. So, guys, in my opinion, going from 700 to 7,000 is actually very easy. Because all it is making sure that we have everything in place, the right people, the right team, and right desire. And I was having a conversation with my good friend Mo here earlier. You know what? He was just complimenting all of us, you guys, because we have an amazing team. You know, I look around the room, the kind of people that we have in this organization, and the leaders, all of you guys, honestly, I'm talking to all you guys, I see the fact that there is nothing on earth today that can compete with the type of people we have, the education we're providing, and the leaders and the educators that we have supporting us all throughout the process of it. This beginning year is going to be very big for us, and I highly recommend we don't wait till January to get started. Go through your education, go through those basic videos, go on the Go Live sessions, and start to follow what you see now, but more importantly, work you guys right now through the holiday season like you know people need to change their lives. Make sense? People are not going to be as receptive as they are now going into the new year, because when they get to that time, they're going to be already falling behind. Make sense? But if you can pick up now, literally the story will change and we'll go into some massive momentum. So the biggest thing that you want to register for, you guys, and I'm telling you this because the event's going to sell out, okay, is the I Am London event, you guys. That event is where when you go there, you are declaring your success. Make sense? You are declaring, I'm going to own this. I'm going to take full ownership of this. I'm going to take control. I'm going to come learn from the best, and that's being it. And guys, I'll say this honestly, if it wasn't for me knowing how much of a big event like that is going to make a difference, I wouldn't have people like Justin in my life who's become a dear friend of mine. Some of the top educators of the program all become dear friends of mine. Why? I was there, they saw who I was, they saw I was committed, and they knew I was going to bring it back home to the country that I live in, with the family and friends I have to help support them. And when you see the kind of heart that these guys have to know that in our intention is to make sure people win, that's it, yes? When they see our intention is to win and we're coming together like none other, you guys, the support that we have in the company, I've already been offered by Christopher Terry to come out here, so we're looking to have a massive event coming up in March, okay? This will be a huge, huge, huge event. So with that being said, you guys, make sure you register for that I Am London event. That's going to really be where if you're going to put your money towards anything this holiday for yourself or anything, it's going to be there. That trip, how many will also need a vacation, yes? Okay, like how many will just need to get away, yes? That, you guys, is going to be a big, fun trip where we're going to be able to take 100 people from Canada, you guys, and blow this thing up, you guys. So that being said, Neil, you have a quick question? Come on up here, brother.
I wanted to share something quickly.
Absolutely, go ahead.
Hey, everybody. So, here's something all of you need to understand as well. With the CRA and IRS, this is considered a home-based business because we're generating income, right? So the trip is a tax deduction as well because you're going there to be educated, to be taught how to be effective traders when you come back to Canada. So you can write off a lot of your expenses, your airfare, the registration, your Ubers, your hotel. So you want to save all your receipts, and here's the tip. Get a good accountant, and I don't mean your brother-in-law. Get a good accountant, especially someone who's a specialist with home-based business. You know, there's a medical doctor and then there's a specialist. So get an accountant who's a specialist on home-based business, and you can write off a great portion of that entire trip. Because remember, tax season is also coming up in the new year. So imagine, not only can we earn money trading, we can earn money building team, we can keep more of our income in our pocket with tax savings.
Absolutely, that's awesome. And a great thing you mentioned that. Very, very good. Give a round of applause for Neil for mentioning that. Absolutely. So guys, just to finish up everything, first off, let's just give a round of applause again for Noel, our guest from Toronto, guys. Appreciate you so much, Noel. Thank you. Guys, big shout out, show some big love to Justin coming all the way from Dallas. First time ever we got a Go Live educator in Canada. First time of his trip ever in Canada. He said he loves Canada and all the brown people here. He was wondering where they were all hiding. We said they were in Surrey. We figured it out for him, so they're all there. And guys, the biggest love and thank you is honestly to all of you guys. Honestly, this team really is a miraculous, I would say, ability to show great people coming together, working together towards a bigger goal, you guys. And I really, when I say this, I truly mean this. Our goal, you guys, is to create the Harvard of trading academies so that this doesn't benefit us just in our life, our generation, to help us have a better life, better financial future, more impact, more income, but something that we can grow our kids in the culture of this for the rest of the come. So guys, thank you guys so much. I appreciate you guys all coming. Thanks so much.
Thank you.
All right, guys. That's
Thanks,
the
Rich TV.
Trading Academy right there.
Look,
There's a trade.
Rich gave me a trade and it paid off. Thanks,
Color
Rich.
winning trades here, guys. Color winning trades here. All right, guys. We're out.